Hi, everyone. Welcome to the latest episode of Rightcurve. My name is Andrew. I am here with two of the central figures who are helping to lead the charge to bring some institutional capital onto Solana. That's my colleague Thomas Uhm and of the Jito Foundation, and Nick Ducoff of the Solana Foundation. We've got a short but I think important conversation planned today on how the institutional adoption curve is looking on Solana, and potentially a little bit about how Jito's block assembly marketplace, or BAM, might play into unlocking more of that adoption. So, gentlemen, I think it would make sense to start with a brief round of introductions. Nick, starting with you. Who are you? What do you do? And who are the types of people you get to talk to all day long?
Well, thanks so much for having me. I'm excited to be here today. My name is Nick Ducoff. I head institutional growth at the Solana Foundation. I joined 2 years ago in July of 2023. It's been just a ton of fun to see Solana grow during that time, and there's so much growth ahead of us. I get to spend my time talking to banks, asset managers, regulated FIs, and exchanges all over the world. And they really see Solana as the next frontier, and there's just an exciting time ahead for sure.
Yeah, that's awesome to hear. And Thomas, same to you.
Yeah, my name is Thomas Uhm. I recently joined Jito. I've been here for about 4 months now. My official title is Chief Commercial Officer, but as Andrew knows very well, Jito is a pretty small team, so you're just called on to do whatever is needed in any given moment. But I do spend a lot of my time, particularly on Jito Sol, which is the liquid staking token, the largest one on Solana, particularly with respect to how to provide access for more traditional financial institutions to access it. Obviously, one big component of that is the ETF discussion, which is kind of ongoing, and today is a big day for that.
That's right. Thomas, you want to take a little bit of a victory lap? I know Carly Rebecca just had some interesting stuff.
Yeah, I mean, so the reason why today is a big day is because we are seeing the second round of amendments from all of the Solana ETF issuers. So we are eagerly awaiting to see what comes in these amendments. What is particularly useful about the amendments today is this follows a round of comments from the SEC. So a lot of the additional content that is in the amendments today are based on questions or scenarios that have been fed them by the SEC. We've been watching eagerly because VanEck included language around the potential use of liquid staking tokens. We'll see if that language is retained or built upon. But last night, 21 shares filed an amended S1, and they included language about liquid staking tokens, which is great. So it looks like the message is kind of coming across that issuers want to use this as a way of providing additional liquidity for their investors. And on top of that, so our CLO, Rebecca Rettig, submitted a letter to the SEC today with a number of signatories, including people from VanEck and Bitwise and the Solana Policy Institute and Multicoin, providing an argument for the inclusion of liquid staking tokens inside ETPs. So we're excited to see what happens today.
Yeah, big day over at like the Jito legal land, which is always surprisingly exciting. You wouldn't expect it, but here we are.
Well, on top of the release of the White House 180-day report yesterday, like Rebecca has just been on fire. So,
but yeah, refocusing on these institutional players, Nick, I want to kick off the conversation with you, sort of setting the field of play. What's it like when you're talking to a major bank or a market maker or any of these really interesting folks that you're speaking with? What is the sort of core value proposition of Solana for these players? And where does it sort of fall short, or where are their pain points as they see it, in terms of integrating their systems and potentially porting over some of their activity to the Solana chain?
Yeah, that's a great question. So the way that I would simplify how I think about it is there's a 2x2. You got banks and asset managers, and then you have Solana the blockchain and Solana the asset Sol. And then with respect to banks, if you're talking about Solana, the blockchain, obviously Solana is the highest performing blockchain in the world, incredibly fast, incredibly low cost, incredibly resilient. I think really becoming the standard bearer for what, high performance blockchains look like. And I think that, financial institutions are increasingly seeing the world that way. So that's very exciting. Obviously, still very early, job's not done, all that, but increasingly, they're investigating Solana and thinking very seriously about it. For banks on Solana, the blockchain, I think first and foremost is the idea of using it for stablecoins or tokenized deposits. Obviously, we had the Genius Act signed into law just this past week. It's open season for stablecoins in the United States and thus stablecoins globally. I think it's great for the growth of Solana, and I think banks are increasingly looking at Solana either for tokenized deposits or stablecoin use cases, and then of course all that comes on top of that: borrow, lend, trade finance, et cetera. I think for banks with respect to Solana, the asset, it's really about custody. So custody for both SOL and then, of course, SPL tokens to the extent that they're tokenizing and using Solana for tokenized deposits or stable coins. And we're starting to see, banks make investment there, which is really exciting to see. Obviously, there's some great qualified custodians out there today servicing the Solana ecosystem, but I think we'd all like to see the likes of the cities, the BNY Mellons, the State Streets to support the asset and SPL tokens as well. So that's on the bank side. On the asset manager side, again, Solana, the blockchain, they're very excited about new distribution rails for assets that they issue. We've seen all sorts of incredible asset managers tokenize on Solana, from BlackRock, Franklin Templeton, Wellington has an announced product, Apollo, Hamilton Lane, Van Eck. I'm sure I'm missing many, and many more to come. And then on the Solana, the asset side for asset managers, the story is the ETFs, and I think they're incredibly excited. You've got filings, from many, including those that you mentioned, as well as Fidelity. And we had In-Kind just announced yesterday, I believe, by the SEC. And so I suspect when the Solana ETFs are approved, you'll see In-Kind for that as well, and hopefully staking, right? That's obviously the one that we're all very excited about. There's not a day that goes by that I don't get questions about that. And I think that's one of the things that makes Solana, the asset, so unique, is that the high reward rate for such a great underlying asset, I think makes it a really exciting opportunity for these asset managers to package and distribute.
Yeah, that's a great answer. And really good to hear the good work you're doing on that front to get some of those sort of brand names under the umbrella. Thomas, I want to dig down a little bit more with you into the pain points, though. I think we have, we're critiqued a lot for having a lot of acronyms and bizarre language in crypto, but it seems like the institutions sort of have their own dictionary as well. Can you tell our listeners, some of whom are, just your run-of-the-mill Solana degen, what's on these folks' minds when it comes to things like best execution and TCA, and where do institutions sort of struggle to apply those principles or bring those systems into an ecosystem like Solana?
Yeah, so sure. So in TradFi, there's in my opinion, a pretty reasonable requirement if you're a professional money manager, particularly in the US, which is that you have to demonstrate that any trades that you do using investor money needs to get executed in an optimal way. So one way that you can do that is you kind of force or require brokers that you use to adhere to this obligation to get you the best possible execution for your order, or is what we call best X obligation. So one way that you can demonstrate best X is to do some post-trade analytics, which are usually called TCA. or transaction cost analysis. So that's just a way of measuring how your fill looks relative to the prices and sizes that were available at the time that you sent your order. So a lot of TradFi is actually geared towards making TCA like relatively transparent. So for example, in the US, if you're trading US equities, there's something called the NBBO, or National Best Bid and Offer, which is an aggregated feed of all of the US exchanges. And for people who are not that familiar, there's actually a surprising number of like registered stock exchanges in the US. So, but the general idea is like, if you want to buy something, and let's say you want to buy something on NASDAQ, but there's a lower offer on NYSE or the New York Stock Exchange, obviously that's not great. So in crypto, BestX and TCA in particular is like really, really hard to demonstrate. The market's incredibly fragmented, and there's no like universally accepted like aggregator or price. And plus you have this problem, which anybody who's tried to trade anywhere in crypto knows, which is that prices on two different venues aren't equivalent because of things like transaction costs or the availability of margin, or maybe one user is not eligible to trade on one of these other venues. So even if you could demonstrate that you got the best price across some universe of lit exchanges, if on top of that you get sandwiched by a searcher, then it's basically impossible to prove that you've actually fulfilled your BestX obligation. So mainly the big problem right now is that the distance between the actual execution, like when you send your order and when you get your fill, and when it's actually printed on the blockchain right now is a little bit too wide. And there's like too many potential, I don't know the right way to say this, like attack vectors or potential entry points for external interference.
Yeah, that makes a lot of sense. The sort of degree of precision that these players probably need when you have a system like Solana that could potentially, be hosting, the classic example is a backroom deal between a validator and a sandwich bot, right? I think it's very hard for these players, or at least I imagine it is, to sort of fit something like that into their risk profiling, right? It's not something they're used to having to deal with. Similarly, though, Nick, just bearing down on another pain point, I'm curious your thought when it comes to compliance for these guys. I know I feel like I've been hearing it on panels for years now, that's a big source of worry for these people's lawyers, and how do you sort of fit that entire schema into this new system? It feels a little bit like a square peg and round hole problem, and things like sanctions and know your customer are a big part of that. Do you think that changes over time, or is there something that these players need that just right now it's really hard for crypto systems to give to them?
Yeah, well, both. I think it does change over time. I think it will change over time, but I think it won't change over time fast enough for some of these institutions to get the clarity they need to operate, which is challenging. So, for example, banks need to comply with the Bank Secrecy Act. They need to know, who, is they're sending money to, and who is holding money at their institution. When they are paying fees to a validator for a public blockchain transaction, in most cases, they might not know who the recipient of those validator transaction fees are. And thus they might be, running afoul of the sanctions list, for example, the OFAC sanctions list, and thus violating the Bank Secrecy Act. And this is something that I think, collectively the Solana ecosystem is working on. I know you all have recently announced BAM, which I'll let Tom talk more about. But I think there are paths to providing the visibility and compliance needed to conform with existing regs. With some of the technology, being developed by you and others in the Solana ecosystem, I think that's fantastic. Because I don't think the OCC, and others are going to provide the necessary clarity and regulation for banks in particular in a fast enough timeline to go where they need to with respect to tokenized deposits, stablecoins, and other use of public blockchains. Specifically, public blockchains that don't have centralized sequencers. So Base, for example, while it being a public blockchain, has a centralized sequencer, and so thus does not have the same types of issues that a decentralized blockchain like Solana has.
Yeah, that makes perfect sense. And I like the framing too. We're going to get a little bit of help from the regulators, but ultimately the onus is to a certain degree on us to try and help these guys figure out how to interact with these systems in a more compliant way, right? And to that end, though, let's talk a little bit about what that could look like on Solana in particular. Thomas, you were talking a little bit about BestX and being able to analyze execution. Nick was talking a little bit about compliance. When it comes to BAM and programmable block space, we're still very much in the early days. We're still figuring out what exactly plugins look like. But, in very broad strokes, how do you envision these systems being able to help these particular players interact with Solana more easily and readily?
Yeah, so we do want to talk about plugins, but very briefly, if we can kind of just talk a little bit about the architecture of BAM in the way that I've been seeing it. And so essentially, I think if you look at Solana like if you zoom out, and I think that this is true for kind of all kind of financial systems, to be honest, but essentially you have like something that looks like a funnel. And sort of at the top of the funnel, you have like anybody who is trying to do anything on Solana. So these are the users, the investors, the traders, people like that. And essentially what happens is, so they all kind of interact with, are trying to do something on Solana. But they use an intermediary. They use like an exchange, or they use an OTC dealer, they use a DEX. So there's kind of, it continues to funnel down. And there's kind of layers of people that they use who provide services. And at the bottom of the funnel right now is the validators. And when I was talking earlier about the distance, part of what I mean is that regardless of whatever your intent was at the time that you tried to do a trade, you wanted to submit a transaction, you wanted to mint an NFT or whatever, what ends up happening is it all kind of funnels down to the validators, and the validators are the ones who have the ultimate control today over of how these transactions are sequenced. And so regardless of whatever your intent was, the validators can choose to kind of reorder transactions in whatever way they see fit. And this is a service that they provide, but they're trying to essentially optimize like what is the best kind of way to order the blocks. And generally, that means in a way that kind of optimizes the return for the validators themselves. And there's nothing wrong with that. I mean, that's the way that the system is set up. But what BAM allows you to do is it allows you to abstract the sequencing out of the validator layer into a BAM node. And the reason why that's valuable is because the intent, it shortens the distance between the intent and what actually gets printed on the blockchain, because everything is kind of submitted, all of what was intended gets submitted into the blockchain and is primarily going to be via these plugins. And so if you execute on a venue that was built on a plugin on top of BAM, what ends up happening is that the plugin's sequencing logic and ability to package transactions, then print them into the intended sequence, makes it much easier to actually demonstrate that the trade that the user was trying to do, the investor, the trader, the thing that they were trying to do actually gets printed into the blockchain as close as possible to what their intended goal was. And so, let's say that, you were trying to optimize this trade. It interacts with other plugins in the sense that maybe, you have just-in-time oracles that makes it easier to demonstrate that, the fills that you were trying to do were done at effective prices. And then there's like a cryptographic proof of sequence between the BAM node and what the validator prints on the blockchain that provides reassurance around things that need to be measured, such as TCA, which can be used to demonstrate BestX. So I do think that BAM unlocks the ability to solve a lot of these problems, particularly when it comes to auditing, for instance, requirements, or to demonstrate that you are doing the best possible job for your customers and for your investors, which is particularly relevant if you're managing other people's money.
I love that. I spend a lot of my time drawing pretty pictures of BAM for various audiences. And so I really enjoyed that one from the perspective of that particular audience. That was a great breakdown. Thank you, Tom. I guess, we talked a little bit about the current state of Solana, the problems that people have on Solana when it comes to this very particular user base with very particular needs. But Nick, I guess I'd like to finish it off from an incredibly high level. Why are we bothering? I'm curious to hear what you think it would mean for Solana if these players really do have the freedom to transact in the way that their systems require. What impact does this have on your, average degen? What does this mean for the ecosystem, and how does it, fundamentally alter, if it does at all, the way Solana operates and what the system does?
Well, I think Tom did a great job explaining it, and I think it makes Solana a faster, fairer network, and I think that's very aligned with Toli's original vision to be an on-chain NASDAQ. When you have a trading venue or a venue where market participants can interact trustlessly, and folks can know that they are all playing on a level-ish playing field, then you're going to find more market participants join and see more flows and see more activity. And I think that's what we're trying to do here is create the global state machine, increase bandwidth, reduce latency, internet capital markets, and all the acronyms, that we joked about. But and we're getting closer and closer to that. And this is another big step forward.
Awesome. And then I guess I'd throw the same question to you, Tom. I'm curious, you spend all day trying to get these guys excited about this tech. What would they bring to the table, you think?
Well, I think we're seeing lots of evidence that the amount of money that is available off-chain is just so large, especially relative to the amounts of capital that's available on-chain. And that's being manifested in lots of different public vehicles and, in public companies and things like that. So I do think that the opportunity in terms of how to make on-chain markets better, if you are a believer in incentives, then the attraction of a substantial amount of that off-chain capital being brought on-chain creates a tremendous amount of incentive for people who are on the chain, the Solana Foundation, all of the builders, and everybody else who are involved, to make that market much more efficient. And once you have a highly performant blockchain like Solana, where the friction between people's ability to do what they want and the people to actually execute on their intents will create a very virtuous flywheel that will create efficiencies of scale that we haven't really seen before. And those efficiencies of scale will manifest themselves in things like tighter spreads, deeper liquidity, deeper markets, and a much clearer price discovery. And the free flow of information combined with kind of frictionless transaction ability on Solana is going to kind of unlock a new type of financial market that I think everyone can benefit from.
Well, there it is. I think you guys are doing God's work then. I really appreciate what you guys are doing to bring these folks to the table. And I want to thank you for jumping on Rightcurve with us today.
Thank you.
Thank you so much for having me.